Claims-made policy versus occurrence policy? What's the difference? This is one of the most asked questions by physicians nationwide when considering malpractice insurance. While both policy types defend you against allegations of malpractice and provide limits of liability to pay damages, the difference rests in how and when coverage is triggered. Understanding the differences between the claims-made and occurrence coverage does not have to be difficult. Here we will provide an explanation and examples of the differences between the two types of malpractice coverage, but first, a few definitions. An incident is the injury or event giving rise to the potential malpractice action. A claim is the demand for money or services, claiming that an insured is liable for damages. The policy period is typically a one-year term from the inception to the expiration date, for example, July 1st, 2024 to July 1st, 2025. Under an occurrence policy, coverage is triggered based on the date the incident or injury occurs, regardless of when a claim is reported. For example, during your policy period, your patient has a procedure that results in complications. However, they don't file suit against you for damages until a year after your policy expired. Because the incident occurred while your occurrence policy was in effect, the claim would trigger coverage even if the claim is filed after the policy is expired. Occurrence policies do not have a retroactive date. Now, let's talk about claims-made policies. A claims-made policy is triggered when a claim is reported during the policy period given that the injury or event leading the claim occurred on or after the retroactive date, but before the policy's expiration. For example, during your policy period, a former patient files suit against you for a surgery you performed 2 years ago. Assuming the injury took place between your retroactive date and the end of the policy period, coverage is triggered. Each year when you renew your policy, a new policy period begins, and coverage continues from your retroactive date forward. Under a claims-made policy, if you change insurance carriers, you may request prior acts coverage or retroactive coverage from your new carrier, or you may purchase tail coverage or extended reporting coverage from your previous carrier. Both options allow you to report claims arising from professional services performed from your retroactive date forward, preventing a break in coverage. It's important for you to understand how your insurance policies cover claims. We exist to protect physicians, so visit us or contact our team of specialists today.